Welcome, you're watching India Market Close, and what a day it has been. A day of celebrations, a day of new highs, and really talking about the strength of the market. Now you see the Nifty just 50 points below 24,000, but you have hit 24,000 today. Let me just pull up the intraday chart for you before we do anything else to show you what kind of a day it has been on the key index. And here, the highs of 24,036 have been breached on the Nifty. A bit of a slide off, but not too much really. You're still about 75 points up, nearly 80 points up on the Nifty today. So it's been an exciting day, suffice to say. The Sensex as well doing well. But this is a story which is not across the board. Let me put it that way, because if you look at your mid-cap and small-cap indices, they aren't really showing the same fervor at all. In fact, the Nifty mid-cap 100 in the red, the small-cap index nearly 1% down. Let me pull up the heat map for you on what has really worked for the key index today, and it's all about the news flow and IT stocks. So IT stocks in flavor. In fact, the IT index over 1.5% up. But look at it over here. Ultratech on top of the pack. No surprise there, because they are buying stake, and frankly, this is now an acquisition in India Cements. In fact, flashes on your screen that Ultratech will pick up an additional 3.4% stake in India Cements. They've already acquired about 20% of that stake, so they will have 23% in all in India Cements. What we have also told you exclusively on NDTV Profit is that this has been bought from the Damanis, not from the promoter. So this is a story which still has to follow through. Nevertheless, group stocks are also doing well as a result. You're seeing Grasim up about 3%. But look at the whole move on IT, LTI, Mindtree, Wipro, Infosys, TCS, all on that top row over there, populating that top row. Dr. Reddy is doing well this afternoon, 2.5% up. They're acquiring a brand which has nicotine control. And while there were mixed views from a number of brokerages on whether this is a good category to be in or not, and what the valuations are, Dr. Reddy is doing well. Shriram financing profit booking today, but if you look at the journey of the Nifty from 23,000 to 24,000, Shriram Finance would be one of your top performing stocks over there. So you're seeing a big move there. L&T, ONGC, a bit of a rotational play, I would say, coming over here, and pretty much even Stevens on the Nifty. Let me pull up the advanced decline ratios for the day, just to give you a sense of what kind of a day it has been overall. And wild swings. So while we've hit that letter mark sort of number at 24,000, it's been quite a wild day. And in the last 20 minutes or so, you've seen this breadth widen. So you have a 1:3 ratio with the declines on top right now at 1547. So you're seeing that weakness coming in. Let me just quickly show you the indices and the sectoral contribution before I hand it over to Samina to talk about what's working in terms of specific stocks. But you have the most weakness coming in the PSU Bank, media stocks, but that's a smaller index, so I won't really go into it. PSU Banks, Realty, Metal is what is largely hurting. It's the IT that is propping it up. Energy stocks as well, apart from a few others. I'll just pull up one more chart, Nifty contributors, just to give you a sense of what is pulling up the markets and how widespread really that rally is. And it's not a very widespread rally, because it's all about RIL and the two tech biggies, Infi and TCS, ahead maybe of their numbers. Remember, next week onwards, actually from July 11th, you see results season starting and their numbers will be out. HDFC Bank seeing a bit of a drag over there. But Samina, good afternoon. On the broader markets, the same cheer is not really there. It's more of a headline buzz.
Yeah, that's true. In fact, I think it was just about touching the 24,000 mark, and I think that's when the selling pressure probably came in. And the market has been choppy and has been volatile. We've outperformed most of the Asian markets, so you want to keep that in mind. There is a little bit of tiredness that has set in after 2 straight days of gains and 2 straight days of record highs. What you also want to remember today is your F&O monthly expiry. An expiry around or at 24,000 is what we're anticipating. We have with us, if we go to our guests, a quick check on the broader market picture. The story has largely been about cement, and the street has been focusing on your Ultratech and India Cement, and it seems like Ultratech is looking to pick up 3% of India Cement at 285, and that's what's just come in a few minutes ago. In terms of other stocks, fertilizers are taking it to the chin this afternoon. So you've got Deepak Fertilizers down 6.5%. Fact is also seeing a big cut in terms of trade. GNFC, which is Gujarat National Fertilizers, is also seeing some weakness despite being in an F&O ban. So across the board, fertilizers are seeing very, very deep cuts. The markets, remember, some may argue that look a little overheated. It's been pretty much a one-way journey over the last few weeks, and the pressure is probably being evident given that the breadth of the market's not been very solid, even though good gains have come in over the last few days. Apart from that, while fertilizers look weak, cement is also seeing some profit taking. You've got Indian Hotels, Swan Energy, and Archeam that saw a big block happen this morning, down 5%. Real estate is seeing some weakness. Hospitality is having it quite rough. So there's a lot more red than green in terms of the broader market index. On the gaining side, you've got Route Mobile that's up 15%. Whirlpool is holding on to its early gains, up 7.5%, 8% up until now. Second straight day of gains coming in for NBFCs like 361. WAM, CSB Bank saw a pretty large block deal in early minutes of trade, but despite that, the counters are 4%, so I guess it could get picked up quite well. Dr. Reddy's is up 2%, CIAT, Persistent are some of the other few gainers in trade. The day probably belongs to IT if it's about any of those gains coming in, but the breadth is something that is a bit of a concern as your Nifty 500 does trade in negative territory. But IT, which is usually considered defensive play, is trading with a gain of about 1.5%. We have with us Rajesh Palvia, Axis Securities, and Chakri Lopriya of Red Strawberry joining in. Rajesh, I'll start with you. We are expecting a close after the June series at 24,000. What is the outlook on the Nifty? Do you feel like tiredness is setting in, and maybe after we hit that 24,000 mark today at close, of course we have hit it, but if we close around those levels for the June series, the next couple of weeks could be weaker, consolidating, more like it?
So good afternoon. It's very early to say that there would be tiredness in the market. It's a expiry adjustment which is taking place in the market. A lot of rollover activity is happening. The call writers are topping up their position at 24,000, 24,050 strike. So that is acting as a supply zone for the Nifty. Though we have seen very strong rally throughout the week, and almost Nifty managed to gain around more than 6% for this June series. So I think overall structure is still bullish. This is just a pause for expiry. So I think till we are holding about 23,900, there is still a possibility that again we may attempt to move towards 24,000 even for expiry also, as major put writers are again topping up at 23,900 strike. So that may act as a good support for the day, as we have seen some decline in the market from today's high. But still, overall structure is bullish, and we believe that this rally may extend further in the July series, and possibly this rally can extend to 24,200 to 24,300 also, as the major positions are intact, and most of the large cap stocks are still showing strength and trading above to their near-term, short-term breakout levels. Even on the banking and financial is also holding the ground. The way Bank Nifty is holding the ground above 52,500 level. So that clearly shows that here also we may attract some buying interest. Most of the large cap banks are contributing to this rally. So we believe that for continuation of up move is likely to be there in the July series also, and we may see further higher levels from here onward also.
Okay. Rajesh, very good afternoon. Tamanna here as well. So those were the levels for the Nifty and the Bank Nifty. But as we start this afternoon trading session, what would be your top picks?
Good afternoon, Tamanna. So first stock is Motherson. That stock is clearly moving in higher top, higher bottom formation. Stock is enjoying its all-time high trajectory. The way stock has performed in the June series, stock almost gained 30% in this month. The way long built-up data setup is there, we expect that furthermore follow-up buying action we could see in the July series also. So one can buy Motherson Sumi here for Motherson for upside target of 205 to 210. Keep your stop loss at around 190. The second stock that we like is from the IT pack, that is Persistent System. That stock is also moving higher. This is the second consecutive week where we are seeing, stock is closing in green. And looking at the overall structure for Persistent, we believe that, furthermore, a rally can be there in the stock. We can see a target towards 41.20 to 41.30. Keep your stop loss around 4010 to buy Persistent. And the third stock, that is Manappuram Finance. That stock also managed to view breakout, and almost stock managed to view breakout of a last 8 to 10 week consolidation range. The way stock managed to view breakout of its multiple supply zone, we believe that this rally can extend, and 225 to 230 could be the next target. Keep your stop loss around 204.
Okay. So, Manappuram Finance with a stop loss of 204 is on Rajesh Palvia's radar. Let me welcome Chakri. Meanwhile, Chakri, very good afternoon to you, and it's been an exciting day with Nifty hitting the 24,000 mark off those levels right now. But do you see this team carrying on, and where does the fresh impetus come from? Do we wait for a bit when the corporate result season begins, or are you seeing more action ahead of the budget?
Good afternoon, Tamanna. I think, the market is still trading at a very decent number, trading at probably about 20 times Nifty, that is. So, at 20 times is still, I think, below the 5-year average. And for an earnings growth, which is on the verge of an acceleration, given that impending interest rate cuts, what we expect in the budget, I think the market still is looking for a good amount of upside from the current levels.
Right. Further upside from the current levels. And where do you think, Chakri, those gains are going to come from? Large cap or broader market stocks? Because today is one such day where the little gains that we're seeing on the index are driven by large cap names and defensives, interestingly.
Yes, it's partly probably profit taking and sector rotation kind of event happening. And I think, the broader market is still very well poised because, most of the expansion, whether it's infrastructure, industrial, defense, railways, you name it, all these things are the companies which are in the broader market, which are very large companies in their own right, not small companies. And the earnings growth for them continues to accelerate. And therefore, I think, the broader market will do well. On the other hand, the Nifty, many pockets of them, including financials, have been underperformers. And, as they begin to display some amount of earnings reacceleration coming back, then I think the Nifty would catch up. And that actually is a good thing because, it tells you that the Nifty is not overvalued at current levels.
Okay. Let's shift focus to our stock of the day, India Cements. And undoubtedly stock of the day because of the big news coming in. It went up as much as 10%, now trading about 8.5% up. The South-based cement company, legacy company, seems to have changed ownership, or at least the first steps towards that have been put in place. Ultratech Cement bought a 23% stake in the company. Remember, we told you first that promoters may offload their stake. We now know who the potential buyers are. Agam is joining in with more details. Agam, first let's talk about how this deal has been structured, because news just coming in that about 3% of the stake will be bought in at 285 rupees a share.
Right. So, well, firstly, very earlier on in the day, we understood that about a little over 7 crore shares exchanged hands in India Cement. This comes to about approximately 23%. And later on, we understand that it is, in fact, RK Damani and related entities who have, in fact, sold this equity to Ultratech. Now, Ultratech Cement has, in fact, will be shelling out as much as 1,885 odd crores for this 23% equity in India Cement. From what we understand in our own calculations, also suggest that given its current enterprise value as well as its current capacity, which stands at around 14.4 million tons, the valuations at which this deal has happened is roughly $90 per ton, and that's the big number that we're keeping an eye on because of the valuations. Of course, a lot of dynamics do change in terms of consolidation for the entire sector. But all in all, these are largely the main points that will come through over the course of the day right now.
Akam, stay with us because you talked briefly about the valuations. Now here's the question: did Ultratech end up paying a premium for an India Cement stake in a company which is quite underinvested?
So let's talk about the enterprise value per capacity in this case, and that comes to approximately $90 per ton for the rate at which this transaction has happened. To give some perspective, Ambuja Cement recently bought Penna Cement for nearly the same amount and the same valuations. Now, take this into consideration and pitch it against what India Cement has to offer in terms of valuations. Now, firstly, India Cement is not as profitable and not consistently profitable as all the other players in this particular sector. And because of that, the kind of EBITDA per ton, that is your profitability per every capacity that we've seen, is just about marginal as against substantially higher numbers for even peers like Dalmia Bharat, well, of course, Ambuja Cement along with ACC, and not to forget Ultratech Cement. All these numbers are significantly higher. Moreover, the assets that come through along with India Cement are also very, very old. So at this point in time, even though it does seem like Ultratech's interest in India Cement seems strategic more than anything, because they, of course, don't have controlling stake at the moment, one tends to question of whether or not the deal at which it has happened is at a considerable premium as compared to the kind of consolidation that we have been used to seeing off late.
Oh, it's interesting, whether it's all about consolidation or whether it's coming at a premium. Let's not forget that that isn't going to be too significant when you look at Ultratech's balance sheet. What is interesting is that across in the cement sector, it is India Cement that probably has the weakest balance sheet, and I think that's what is worth taking note of. What this will do to the other cement players, will it improve their valuations, is one thing that we'd like to understand when we talk to an expert in a minute. But Chakri, you want to comment on this in very interesting M&A activity that happened this morning. Ultratech came on and acquired stake, which is held by Tamanna ji. Of course, the initial expectation was it was going to be a promoter change, because there has been succession and legacy issues. That not yet ruled out as we see it, but as a minority shareholder for India Cements, what do you recommend the investor to do? And also, as an investor to Ultratech, what would be your advice?
At the outset, we hold India Cement as a disclosure. Second is in terms of, at about $90 a ton, which is still very, it's below the replacement cost if you look at a company which wants to expand. Ultratech, has ambitions of expanding in the south. Just before this whole thing is unfolding, Ultratech has about a 10% market share, and it wanted to add approximately 15 million tons in the south. So interestingly, it turns out that India Cement has about 15 million tons. Now, and it had to do that because, post Adani acquiring ACC and Ambuja, Ultratech had to do something to defend its market share, because Ambuja is a big player in the south. And if this deal in some contour goes through, then Ultratech would have, probably be at about 20% market share, and Ambuja would probably be about 16% market share. So strategically, I think it makes a lot of sense for Ultratech, give both in terms of its expansion, as well as the brands, very good brands that India Cements has, cement brands that India Cements has in the stable.
Interesting. You are constructive on India Cement. Rajesh, technically on the charts, if you're a swing trader and you'd be looking to buy strength, and in that case, India Cement would still look very hot to you. Do you agree 25% over the last 2 days on the charts? What's the verdict on India Cement and Ultratech as well while we're at it?
So especially in last two trading sessions, stock has moved up very sharply, and now stock is approaching towards its multiple supply zone on the long-term chart. If we analyze on the monthly chart, this is the long-term chart. It clearly mentioned indicating that if it now there is some follow-up buying action happens above 285 288 zone, then yes, there could be another round of rally we can witness in India Cement, and then possible target towards 320, 330 could be there in short term. So those who have already bought or want to buy this stock at current level can hold the position and keep stop loss at around 275. There is a high possibility that yes, as the broader market is in a bullish trend and most of the outperforming stocks are continuously showing more buying interest. So I think there could be another round of rally we can see, and 320, 330 could be the next target.
Right. Uttam Kumar Shrimal of Axis Securities is joining us, and he tracks that space very, very closely. So just wanted to get his view also on the big deal of the day. Mr. Shrimal, welcome, and great to have you on NDTV Profit. Let's get down to it, and the question that we've posed in our coverage as well. In terms of valuation, do you think that Ultratech has paid a premium for an India Cements, a solid brand, etc., but an underinvested asset at the end of the day?
This deal has been done at 85 rupees dollar a ton. So I think it's a fair deal, and deal has been. Ultratech has not paid any premium for this, because normally when you set up a new greenfield unit, you spend around $110, $120 per ton. So at $85 a ton with good cement asset, I think it's a fair deal on the part of the Ultratech.
Uttam, it's also Samina joining in now. Help us understand this. Early this morning when the deal was happening, we weren't sure who the seller was, but the anticipation was that it could be the promoters marking their exit because there are succession issues with Mr. Srinivasan. Interestingly, Mr. Damani has picked up the stake and now holds 23%. Do you feel like over the course of the next couple of days, Ultratech will continue to acquire stake and the promoter's stake could be next up, which could mean that in order to achieve that controlling stake, there could be some more stocks that could get tendered and another block deal on the offing?
Yeah, see, basically, when Ultratech acquired 23%, they basically mentioned that it's a financial investment. So, for an open offer to click, they have to acquire another 2% because open offer gets clicked over 25%. So now it's depends how Ultratech goes with this, whether they will stick with this 23% or they will acquire more to click and then that open offer. So I think over a period of time they may decide, but currently they have not spoken anything about that, and they have specifically mentioned that it's a financial investment in the company.
Mr. Shrimal, just a question about where the stake has come from. So now exclusive sources to NDTV Profits, Sajid Mangat, have said that this is the Tamanna stake which Ultratech has picked up, not from the promoter family. How do you see that following through? Is this now a foot in the door? And we were speaking to an analyst earlier this morning as well, who was saying that this is not typically Ultratech style. So that if they want to go in and acquire a company, they would not definitely stop it at 23% stake. So how do you see all of this following through?
See, basically, it seems that they have Ultratech have taken the stake from Damani, Mr. Radhakishan Damani, and since consolidation in the industry is happening at a faster rate, so I believe considering all those things, Ultratech might have taken this 23% stake, and over a period of time they may decide for additional stake so that they can give open offer to the minority shareholders of the company. But it's all about getting consolidation, and larger players with strong balance sheets, they are going for the consolidation of cement assets where they are available at good prices.
Uttam, just getting beyond what one does now, I'm guessing a lot of the minority shareholders would have tendered their stock over the last 2 days given the 25% rally that we saw or have seen on India Cement. What would you recommend to an India Cement investor and an Ultratech investor at this stage? Would you look at fresh buys also? I mean, are you going to be circumspect or constructive?
See, basically, at 285 a share for India Cement, it's a good deal for minority shareholders of the India Cement. And I think they should, at this price, they should book profit in the India Cement share. And for Ultratech, for Ultratech shareholders, I think they should hold their shares for a longer period of time, because once this consolidation story plays out, and most of the benefit will play out over a period of time, not right now. There will be further appreciation in Ultratech price, but at this juncture, I believe they should hold on and wait.
Just last question from you, Shimal, on the outlook for the sector. I think the excitement is that this is the beginning of a consolidation or a continuation of the consolidation in this space. There could be more cement companies on the block, especially the smaller and regional players. What would be your top picks in that context?
From our side, top picks remains Ultratech in the large cap space. And in the mid cap space, if you ask me, I would prefer JK Cement in the mid cap space.
Right. Thank you very much, Uttam. Good talking to you and getting your perspective on this. Maybe this is just the start of what may come for India Cement. Further buying from Ultratech cannot be ruled out. Of course, management has said that this is just a financial investment for now, but some argue that it comes in at a huge premium in that case. Well, a quick check on the Nifty as well. We are around those levels of 24,000, eyeing June's expiry. We are about that again, 24,017 on the index. In fact, this is the fastest 1,000-point, second fastest 1,000-point movement that we've seen on the index, from 23,000 to 24,000. The quickest, one of the quickest ever 1,000-point journey on the index. As expected, we called it out this morning. Despite weak global cues, we were anticipating expiry to be at 24,000. We'll take a break. We'll come back. We'll talk to Gurmeet Chadda as well about a lot more about the streets. So stay tuned.
All right, well, this is India market close. We're taking a look at the futures and options space. And, well, it's turned out to be a relatively choppy session. Sure, maybe even on expected lines because it's the monthly expiry, but a positive one. Now, of course, among the big takeaways is that the Nifty is, it seems, is likely to close around the 24,000 mark, which is a milestone by itself. Rollovers are picked up substantially. The last half an hour is going to see this rollover number will potentially move certainly above the 65%, but potentially it could even be as close to 70%. It's a wait and watch on that one. But coming down to the bank Nifty, again, that's where we've seen more, well, a little bit of flattish trunes and a little bit more increase in open interest towards some more positions being built. We're actually looking at a lot of milestones being taken in, and based on that, the real question is that while everything is looking great, the market breadth at this point in time is not the most encouraging. That said, let's just focus on what's happening with the Nifty. And at the moment, perhaps on expected lines, we're seeing a lot more writing around puts, and now also a little more writing around the 24,000 calls as well as puts. So the expectation of the market is that we will see the expiry roundabout at the 24,000 mark. Moving on, as far as your overall open interest distribution is concerned, there's not too much change there. But when it comes to stocks, and that's where we have a little bit more focus. There's a lot of unwinding coming through, but remember that that is also on account of the fact that we are seeing the June futures expiry today. Of course, we do have TVS Motor Company, Bharti Airtel, Cipla, and Focus, even among stocks which are seeing unwinding. If we can pull that up again. We'll see a large amount of June futures unwinding because it is expiry. But in terms of your absolute changes, again, keeping an eye on counters like something like Nipca Lab or AB Capital. All in all, it's a good day of trade for the Nifty. Broader markets, the advanced decline ratio is not as encouraging. And based on these cues, given the fact that the India Volatility Index has advanced higher, the question really is, can we expect volatility to resume here on as we move on to the next big event, and that is the union budget?
It is event-based risk that the markets are now going to be facing, but 24,000 expiry is what we were expecting, and that's exactly how it's played out. So for now, we'll enjoy the moment and feel good about it. On the Nifty as well, stocks like RIL, IT stocks are your key contributors in today's trade. Well, Gurmeet Chadda, Managing Partner and CEO of Complete Circle, now joins in. Gurmeet, before we talk about the big talking points on the street today, which is of course cement and the kind of buying we are seeing in defensives, what do you feel? Do you feel like it's we've made the mark of 24,000, but as we go into the budget and the next couple of weeks, we could see some selling pressure because the street is abuzz with the fact that there could be a big correction coming away. Do you feel the same? And the breadth is weak, which is a little concerning for me.
Yeah, I think 24,000 is just one of the many milestones we'll be celebrating. When I had this discussion with you and Neeraj and Tamanna, and I said that every 10 years, Nifty becomes Sensex. So when Mr. Modi came, it was 6,000 Nifty and Sensex was 24. Today you have Nifty at 24. And when Manmohan Singh became the Prime Minister, Nifty was 2,000 and Sensex was 6,000 and Nifty became 6,000 in 2014. So I think long-term story, I don't think so is an issue. But I think the biggest celebration should happen in India when you see larger dips, like the one we saw on 4th June, or when there was an Israel conflict, or when there was a Ukraine issue. You keep getting these opportunities. I think the stance should be, buy on dips. I think some correction is healthy if it happens. Already we are seeing pockets of small and mid cap seeing some pressure because the valuations have run up quite excessively in few pockets. So some rotation will happen, some correction will happen. And if you get a broader dip due to internal or external reason, I think the stance should remain that, we are in a long run buy on dips bull market. Most importantly, I think one thing which investors now need to do is just temper down return expectations of it. I think it's, everybody we meet to just simply talks of 30-40% returns as if it's there for the taking. I think that to me is the risk. The risk is not 24,000. The risk is the expectations at which people are now building the portfolio.
Gurmeet, hi, Tamanna here. And you're right, we have one milestone after the other, but no reason not to celebrate each and every one. Because remember, before every milestone comes that period of uncertainty, doubt, and the wait for the big correction. Now, we were just talking in the break about all of what's happened today from the perspective of June 4th. Because on June 4th, things looked so dismal, overheated, froth, this, that, and the other. You've now crossed a 3,000 point journey just in that much time, in just about 3 weeks. So looking at it from that perspective, if someone is looking at the screen right now and saying what next, where next, what would you tell them?
So as I said, I think rotate the portfolio a little bit. See, banks were completely out of favor till a month back, and we saw big revival in bank Nifty led by banks which were not doing that well, like SDFC, ICICI was at 1100 range for a while. I think the next would be NBFCs. Somebody like a Bajaj Finance, well-run NBFCs. As we have bond inclusion tomorrow, the 10-year yield should drop a little bit more in my view. As cost of funds ease, I think, and you have one quarter where you can demonstrate slightly better NIMs than what they are doing in the past. I think, and I've been speaking to a lot of business managers in NBFC. There's an increase in yield in LAP, LAS, most cases, most products, even by NBFCs. So you will see NIMs much better in coming couple of quarters on earnings. Housing finance, I think, is recovered from the last discussion we had, assuming there'll be more announcements on the budget. And I would be tempted to also look at themes which I told you there are something which are, the government will focus on more for the medium term, like, the way we are recycling our natural resources. Water is a huge shortage in metros. We're hardly treating our sewage. So desalination and water treatment could be an opportunity. Same is the case with plastics. We discussed one of the few ideas, a couple of weeks back, Tamanna, on the show. So that would be in focus. And I would want some rural recovery to come in. I think that's very important for this growth. What we are seeing in Nifty to be inclusive is that the rural economy shows some signs of revival. So we're trying to get into some FMCG names. There's some subdued names in FMCG, including the larger ones like ITC, Tata Consumer. They're actually down 15% from the peak. So be a little, counter-cyclical, put names going through temporary pain. I think is a good point to, reshuffle and rotate the portfolio.
One sector that I saw this morning, in fact, over the last few weeks and months now, we've been seeing, blanket sell calls across the IT sector, be it an LTIMindtree, be it a Forge, Tata Tech, Infosys alike. Surprisingly, today's gains or today's record high is coming on the back of a strong move across IT names in the large cap place, largely. Do you feel like it's now time to go out and pick up some of these IT stocks? A recovery around the corner in terms of earnings, even though I do feel that elections will remain an overhang for a while?
I see typically when, the latecomers start participating is when markets tend to peak out. I think IT, you probably need to differentiate between pure IT services and companies which have both IT services, software business and platforms. I think that's where the market is moving to. So in large caps, we like HCL Tech. It is a very robust software business. They do over $1 billion revenue with 25% margin. This is much better than 15-16% margins you do on IT services. And then they have ERD also. So far more diversified portfolio. Valuation still reasonable. I would not call them cheap, but they were probably a little more reasonable at around 11-1200 levels. Similarly, for something like a KPIT or Tata Technology, Tata Technology is more digital engineering. KPIT is more software and embedded software for cars, right? So that again is a software business more than IT services business. One of the software they make is Aldo 4, which is actually much better than even human driving. Right? It's much more safer, adding more and more labels. Some platforms like Zomato and Policy Bazaars of the world. So I think you probably need to shift a little bit from, let's say, pure services play to something which is more comprehensive, which includes software and platform as well.
Gurmeet, since you're talking about this entire space and EV, Auto Ank, all of that is in such focus, let me extend that to the battery players, Amara Raja, Exide, and frankly, right now, even a Sona. Why don't we talk about a Sona, a huge, PLI, OK, and Node for technology. Which of these would you bet on, and is this really the next pocket to look at?
200%. I think what has happened, Tamanna, is that there's hardly been any capex on IC engine parts.
Yeah.
Everybody was moving towards EV. And if you, for example, in India, we sell 40 lakh cars a year, 95% is still IC. Only 5 or 6% is EV and hybrid put together, maybe 8%. And Ukraine was the second largest market due to the war situation there. The supply chains got disrupted. China has completely moved to EV. So India actually is now the only market which is actually doing, so there's hardly been any capex in, let's say, fabrications and toolings and wiring harness. And so basic stuff, right? So what we are doing is we're making a portfolio which is if you remember, everybody was doing clean energy, and suddenly the thermal energy guys and everybody came that look, we need energy first, right? Clean, natural. Will come to that topic later. I think auto also will see that, and probably Toyota is teaching the world that probably the future could be hybrid. Who knows, right? So we are making a portfolio which covers all of these names. So we have Sandhar, which is into frames for two-wheelers, fabrication, etc. We have Sona BMW, as you rightly said. Sona has just got a patent for another tractor electric motor. They have a nice EV portfolio, and they are the market leaders in hybrid powertrains and assemblies. Then you have somebody like even the old Motherson Sumi, which is now I think Samvardhana Sumi, which is again into wiring harness and all. And we are trying, and we got lucky with Uno Minda. I've been holding it for more than 6-7 years now. And Uno Minda again has a very nice portfolio, convenience portfolio, premiumization portfolio, safety portfolio, as well as the EV portfolio. Great beneficiary of more content per car. So make a portfolio and I think and just map the value chain. So I'm actually more gung-ho on IC engine and auto ancillaries versus pure EV plays.
Gurmeet, we can't not ask you about how you feel about the cement sector and that big M&A announcement that happened this morning. I think the whole street got very excited, trying to guess who the seller was. Buyer, we know it is Ultratech. Some argue that they paid a premium to acquire an asset which may or may not be looking at as healthy as most others. What do you make of the deal, and what does it mean for the sector and the stocks? And taking a cue from this, who could be up for grabs next?
Difficult to say, but I'm very excited. I started my career, me and my partner both, Chitesh, we started our career as cement guys. So I'm pretty excited to finally see some consolidation. It's a very scattered industry. So if you see about 6-7 years back, the top 5 guys were like 44%. Now the top 5 guys are about 55% of the industry capacity, and this is only going to go up because what happens in cement, it's a very capex heavy, manpower heavy, and you need a lot of fuel efficiencies. And at a certain scale is when return ratios come, and then you start beating the lower players. So you'll probably see more of this happening. And I think we've seen Sanghi, we saw Kesoram Industries, we saw Penna being acquired by Adani, and today you saw Ultratech acquiring some stake in India Cements. I think this particular deal, I thought it's a little expensive at about $90 a ton, considering that India Cements also has a lot of old plants. We like one name, which is Sagar Cement in this portfolio. Sagar is available at about $55 a ton, and 55% of the sales is in AP, Telangana, and Tamil Nadu. Now, obviously, they're expanding to Maharashtra as well as Rajasthan, and very, very fuel efficient. They have 80% captive power, almost 60 megawatts of power, and very good product mix as well. So that is something that could come on radar. So a lot of smaller names which would come. See, cement, what happens is the location of the market to your grinding unit is very important because freight plays a very important role. So a lot of these cement companies have grinding units nearing the marketplace, and that is where I think a lot of these big guys, including Ultratech and Adani, would be focused on. So I think you'll probably see 3-4 more acquisitions, more consolidation, mostly in South, because that is where the capacity utilization is still lower, in my view.
Gurmeet, just to follow up there, you mentioned, I think, just in passing, that this was expensive in your view. Can you elaborate on why you think so?
See, as I said, if you see the metrics, it's about $90 a ton. So today, if you set up a cement plant, the cost of setting up the plant is also $90. So you're getting it at replacement cost. I said that some of the names are still at $50, $60 a ton. In fact, ACC right now, it's not that anybody is going to acquire ACC. ACC among large guys is almost at replacement cost. So from a cost point of view, I'm saying, there might be other, Ultratech knows it best. Maybe for some pressure from JSW and Adani in terms of South, because they wanted to have a print there, because that is where the action has shifted in terms of competition. So Adani acquired Sanghi, so they increased the dominance in Gujarat, a little bit in Maharashtra. Maybe it is more strategic and not just the cost involved. And the plants of India Cements are relatively older. We have a lot of guys where the plants are relatively newer. So Sagar Cement, for example, the capacity was 5 million tons 5 years back. Today, after Andhra Cements, they are at 11 million tons. So they've grown faster than what the industry has grown at. And there are a few more names. But, I'm an outsider. I can only comment basis financial metrics. I'm sure there are a lot more things which go into consideration, but you will see more of this. India has almost 110 mini plants of cement with, let's like a 1 million ton or half million. A lot of them will also get acquired.
So clearly, at heart, you're still a cement guy, Gurmeet. The passion that you have for the space is clearly visible. But anyway, great to speak with you today, Gurmeet Chadda, there on all things markets. Of course, where the index is going and on the cement space, and the big news today as well. But just a quick word from Amara Raja. Now, remember, they've announced a significant milestone in their expansion strategy, securing a licensing deal with GIB Energy. That stock had run up massively yesterday. In the last couple of days, really, you're seeing some profit booking there today. But we spoke to Vikramaditya of Amara Raja Energy and Mobility about what it means for the group's future. Listen in.
The future of storage is bright. There is a little bit of concern on the pricing, but India being a country that has, I don't think we're going to be slowing down on our renewable investments anytime soon. Getting batteries at the right price, the right technology is going to be very critical. And it's something that I think is quite enabled with the kind of partnership that we've signed. The partnership we've signed with Goshen Innobat, it's a European subsidiary of Goshen High-Tech from China. They're a top 5 player in China, and by LFP chemistry, one of the leaders, especially in the technology. We believe that, for all of our automotive stationary customers that are emerging, that this is going to be a great move. It allows us to bring world-class technology and products, to their doorsteps in India. And we're looking forward to, collaborating deeply, not only in cell making, but also having access to the raw materials, that kind of pricing that your previous guest mentioned, and being able to eventually secure some level of raw material security and pricing so that we can have a successful project here in India.
And it only gets better. The Nifty is at its day's high point, 24,045, 176-point gain on the index. This is not how we'd started the day, but remember the expectation was we would hit this mark as we see June's series expiring. A little more choppy trade cannot be ruled out over the next couple of weeks as we go into budget. But Rajesh, top recommendations. How do you feel about the markets right now? Where do you feel the July series bets are going to be? Any stocks that you're recommending for July?
So I think first stock that we like for July series, that is Reliance Industry. The way stock managed to break out about 3,000 mark, and the way long built up is there in the data. We expect that this rally can extend further, and possible upside target towards 3130, 3140 could be there in Reliance Industry. So that stock is looking attractive for July series. So I think one can buy with stop loss of 3010. The second stock where we are focusing, that is Mahindra and Mahindra. Again, the stock in a mild profit booking was there in last couple of days, and a stock took support from its 20-day moving average. The way stock is showing the rollover action, we believe that this momentum can extend further, and possible target for July series we can see towards 2980 to 3000 kind of zone for M&M. So here is one can buy with stop loss of 2840. And the third stock that we like is Cummins India. Here also we are seeing a good strength. Stock is enjoying its all-time high trajectory. The way stock is moving in upsloping channel on weekly as well as on the daily chart. A very strong buying action is taken place in this stock in last couple of weeks. We expect this momentum can extend further. 4,300 to 4,400 could be the next target for Cummins India. Here one can keep a stop loss of 4,050.
Okay, so that's the big call there from Rajesh Palvia. Chakri, just let's look at some of the IT names. And IT has had a great day. I don't know if it's a defensive play or if it's setting the pace before the results season starts. But some of those IT names are really revving and up there. Would you be constructive at this point on the IT story?
IT has largely treaded water over the last 1 year or so, and for the right reasons, because U.S. interest rates are high. Order book is there, but it's not turning into billing, and therefore there is no EPS acceleration. So it's unlikely that we're going to see any kind of an earnings acceleration in this quarter when they report results. But at least if you see a thaw in order book translating into some, I think that is a signal to watch for. So until we see that, I think you wouldn't really miss much and wait to see those signals.
Right. One stock apart from India Cement that is rallying up and is a top gainer on the Nifty 500 is Root Mobile. The stock is up quite sharply, 13.5% higher, and this is on back of Microsoft and Proximus Group's backed. Richa is joining us with more details on the benefits and what does Root Mobile have to do with Proximus. Richa, what is the connection between Proximus and Root, and what will the impact of this deal with Microsoft be on the company?
Thanks, Samina. So as you rightly mentioned, the stock is up in trade today. Now, this is because Microsoft and the Proximus Group has signed a pact for collaboration on digital communication and cloud services. Now, Root Mobile is a subsidiary of Proximus Group. Okay, so that is why the stock is up in trade today, and this partnership is for the next 5 years. Now, the existing cloud services will be moved to Azure. Now, Azure is the cloud services provided by Microsoft. Additionally, even on Monday, Root Mobile had announced partnership with Bill Easy for WhatsApp-based metro ticket booking, and this was for 3 additional cities, namely Nagpur, Hyderabad, and Pune, and it already has this kind of services in Delhi. Now, talking about the stock performance, Root Mobile is up around 20% just in 5 days and has given returns of more than 70% in just about 1 year. So this is what we have on Root Mobile and Microsoft.
Okay. All right. So Root is having a great afternoon, actually, about 13% up right now. Rajesh, do you track the stock?
Not actively, but I was just looking at the chart. Very strong buying action. Though stock was in consolidation, and now after today's up move, stock managed to view breakout of its major supply zone, which was placed at around 1750 kind of zone. So looking at the near-term, short-term structure, if it continues to hold above 1750, 1760 kind of zone, then yes, there could be another round of follow-up buying action we can see in this stock. And then possible target towards 2000 also we can see. Very strong, volume action in stock taken place. So I think there could be another round of buying action would be there. So I think those who have already bought at lower level can hold the position. Trailing stop loss now should be placed at around 1810.
Well, surprise, surprise, it's Mazgar Dogs again, 8.5% on the stock. It has been given a Navratna status. The counter on back of that responded very well in trade yesterday. And this morning this afternoon, 8.5%, it's come out of nowhere. So you can see that big spike on the counter. It made an intraday low of 4,025 and is at 4,584 in terms of a record high, but not looking too bad at 4,400 right now. Chakri, you want to come in on defensive stocks? Anything still looks attractive here? I don't think it's fair to talk about valuations because these stocks are now charting a new journey in that sense of their own. Still momentum around? If yes, what do you like here?
Mazgar Dogs, in this case, is a turn to be a Navratna company. That will translate into a margin improvement for the company because its cost of funds will go down, amongst many other things. It will pre-qualify for a number of bids out there. And third, the kind of businesses that it is in, that is making submarines, is not an easy thing to do. And so therefore, there's hardly any competition. And that in itself affords a premium multiple to the company. And many of the companies in defense have that kind of an advantage. If you take Hindustan Aeronautics, same story, aircraft manufacturer, a fighter aircraft manufacturer. Again, not too many companies in India can do that. And so therefore it can trade at a higher multiple. And the order book for all these companies is exceedingly strong. And so the earnings growth for the next 3 to 5 years is very strong. And therefore, these companies clearly look good for the longer term.
All right, another stock that is buzzing in trade today is Whirlpool India. It's risen as much as 19% on the back of Bosch bidding for Whirlpool Corp, the parent. It's come down from those levels, but still about 8% up. Kanika joins us with the details of that story. Kanika, what would be the impact for Whirlpool India, if at all?
Thanks, Tamanna. So Whirlpool India, which is buzzing in trade today by almost 6.4 times its 30-day average volumes. Now, the stock has hit an intraday high of almost 19.7% today to mark a new life high. Now, this was mainly on the back of Reuters reporting that the German firm Bosch might try to buy the rival appliance maker. And Bosch has been in discussions with advisors about a potential bid for Whirlpool Corp. And there has been no guarantee that an offer will be made according according to the report issued by Reuters. Now, the impact of the move, firstly, Whirlpool shares have faced pressure due to a sluggish sales of large household appliances, and this move could boost Bosch's position in the household appliances market. Additionally, Bosch has been diversifying beyond its core business due to declining EV sales affecting demand. And the CEO of Bosch had mentioned at a recent conference that Bosch aims to expand in the US market via acquisitions. Also, Bosch's home appliance segment, which includes products like dishwashers, fridges and coffee makers, they could benefit from cost savings if the Whirlpool deal comes through. Some key details about the stake. In Feb 2024, Whirlpool Mauritius sold almost 24% stake in Whirlpool India, taking down the stake of Whirlpool Corp to 51% from 75% earlier, thereby retaining control post the transaction. And the proceeds were used to cut debt in 2024. And Whirlpool Corp has guided that EBIT margin for Asia will be at 3% for FY24. Back to you.
Okay. Right, Kanika, thanks for that. That's, of course, Whirlpool, and the excitement on the stock is there for everyone to see. Well, a quick check on the street. It's turning out to be an exciting end to the June series. Route Mobile is up 12.5%. IT is leading the gains. The breadth of the market in the last 20-30 minutes has also improved significantly. You've only got a handful of losers on the Nifty 50. Most counters are gaining, and that's the sort of improvement that we are seeing. L&T, Shriram, Aisha, the few losers. DVs is not looking too strong. On the gaining side, Ultratech is your top gainer, up 5.5%. LTI, Mindtree has also come back this morning. Wipro, Infi, TCS are all looking pretty good. Adani Ports, on back of that S&P upgrade, is also having a pleasant day of trade. Well, Rajesh, as we're wrapping up and going into the last 4 minutes of trade, any buy today, sell tomorrow, sell today, buy tomorrow calls from you?
I think the way market has recovered in last half an hour, it clearly shows that there could be follow-up buying action in the very first day of July series also. Here are the some stocks idea where we are focusing for BTST. First one is from telecom, that is Bharti Airtel, is looking very promising. The way stock is holding the ground at higher level, there could be another rally in Bharti Airtel. Possible target for BTST we can see towards 1520 to 1530. Keep your stop loss at around 1465. The second stock that we like is Adani Port. Again, here stock is now trying to give breakout of last 4 days consolidation. Looking at the overall setup, we believe that here also we can see a rally towards 1530 to 1540. So Adani Port one can buy with stop loss of 1455. And the third stock that we like is GAIL. That stock is also now approaching towards its all-time high trajectory again. The way stock has recovered from its recent low, we believe that here also we can see some follow-up buying action. Possible target 225 to 230. Keep your stop loss at around 212.
All right, so thank you so much, Rajesh and Chakri, for joining us today on what is really a historic day in that sense. I mean, just because we're getting used to new highs every day or so doesn't mean it becomes less important, because you're looking poised to close above the 24,000 mark. I know you have just about a minute and a half to go, but look at the kind of recovery you've seen in the Nifty in the last few minutes or so. Let's pull up the line graph and the intraday for the Nifty to show you the movement which has come in there. Remember, when we opened the show, the Nifty was struggling to stay or keep up to the 24,000 mark, but you've seen this jump up in the last few minutes. So 24,057 right now, and we'll wait and see where we close, but at least close to 200 points up. What has worked for the key index? Let's pull up the heat map and take a look at that before we get into the other metrics and the broader market story, which unfortunately is not as positive as what we have seen. Much more green than when we started the show. That's one thing which is very clear. Ultratech gaining strength over there after that India Cements acquisition. That's a story which is yet to unfold, remember, because what we have learned is that Ultratech has got this 23% stake from the Damanis, not from the promoter company. So where does this go from here? We're waiting and watching. NTPC doing well. Grasim also up in trade today. Dr. Reddy's is an interesting story because of that acquisition. Tata Motors is a late entrant to the party, up about 2% now. Remember, Tata Motors management met with the media yesterday. They talked about all of their plans and how they're focusing on their EV production for export markets as well. Tech is the story of the afternoon. LTI, Mindtree, Wipro, Infosys, TCS, all of it really rallying well, and RIL is up over 1%. Remember, in the last 2 days, the big boy RIL Reliance has really pushed up the markets on the losing side, and not really with any great losses. This is also showing you the strength in the market right now. L&T, Shriram Finance, Divi's, Eicher, some of them. HDFC sulking a bit, but look at the kind of enthusiasm and optimism on HDFC, including that note from Lawrence Belanco of CLSA. So HDFC one to watch out for perhaps in the next few sessions of trade as well. If that's the story on the Nifty, and let's see where we are closing. Yep. We're closing above the 24,000 mark. So that's a big one. That's another sort of big day for the markets, undoubtedly. Let's look at where the breadth has ended up at the end of it. And, that's where we come to the broader market story, which has not been that positive. So advanced decline ratio skewed towards the declines. The mid cap and the small cap also not perhaps ending with that much of strength. The mid cap 100, about 0.5% up. So not bad. Recovery there as well. But small cap stocks are 0.5% down. I'll just round this up with showing you the top gainers and losers on the S&P 500. And where that story really has ended today, Root Mobile is the big one. Tie up with Microsoft, so that's got a nice jump up in afternoon trade. India Cements, of course, as a target company being acquired by Ultratech, the big boy. Whirlpool are really enjoying the moves at the global level. Bosch wants to buy Whirlpool Corporation. Macrotep, Mazgaon are some of those which have really jumped up. On the losing side, I've seen a real estate company on this side of the street pretty much every day this week. An interesting report out talking about how Hyderabad and Mumbai sales have actually declined year on year. So that's one to investigate, whether all is really well in the real estate space. And the fertilizer stocks continue to sulk, whether it's Deepak or Chambal. But all in all, definitely a celebratory day for the Indian markets. But with that, that's all the time we have on the show. Thank you so much for watching. Stay tuned. A lot more coming up on the other side.